What's up guys, welcome back to the channel. Today I've got a topic that I have covered before, but I want to revisit this about a year later from the last time I made this video, talking about trading signals. Should you use them? Should you avoid them? And can you make any money copying somebody else's trades? Stay tuned, let's get into this one right now. Hey everybody, I hope you're doing well. My name is Nick. I talk all about trading and investing here on my YouTube channel. And today we're going to talk about a topic that is pretty controversial and a lot of new traders, when they first come into trading, one of their first reactions to it is, okay, well, if this guy is sharing his trades in the form of a signal, why shouldn't I just copy him if he's got all this experience? And today I'm going to break down why I think following or copying people's trading signals is a losing game, especially, or actually exclusively, if you don't know what you're doing or why they are doing the trades that they are doing. Now, the key thing here with copying somebody else's trading signals is the idea is, you're a new trader, so you say, okay, this person seems to do really well, and maybe they even have a track record of doing well. And you say, okay, I can just copy their trades. So here's you're sitting there, you're like, okay, I'm this dude or lady who is new to forex, new to stocks, and I just want to copy this guy or girl because they have proven results and they look very good, and over time their money seems to be going up. And I would say first things first, if you're going to follow anybody's trades, they should have some sort of track record from a third-party verified site such as myfxbook.com. I'll pop up mine here on the screen so you can kind of see what that may look like. Now, first warning signs, if you're going to follow someone or see what they're doing in the markets, make sure that their track record does not look super ridiculous. If it's something like 5,000% in a week or something like that, it's probably not a sustainable approach to trading. Anything too good to be true is probably not true when it comes to forex trading, anything like that, any sort of entrepreneurial opportunity. Avoid that sort of stuff at all costs because it's almost certainly a scam or not real. So that's the first thing to talk about, is make sure they have a track record before you even consider following somebody else's trades. Now the next thing is, why would you as a new trader still mess things up by trying to copy someone else's trades? Here's why. The person that has the experience, that has shared their trades in the form of signals, they probably have years behind them in terms of blood, sweat, and tears to get to the point where they are able to share trades that are overall profitable. Now, profitable does not mean that every single trade that this person sends is going to be a massive success. In fact, right now, as we speak, I have like a 6-trade drawdown, meaning that I've taken 6 losses in a row. And that's unfortunate, but it happens. Now, you might be asking, well, Nick, don't you share your trades in your service? And the answer is yes, I do, but they are not meant to be copied, and I actually heavily discourage that because a new trader doesn't know what goes into a trade. All of the years of experience behind them cannot simply just be copied and pasted. It's kind of like trying to copy your way on a test. You just won't know. You might be able to get the grade short term, but long term, when you actually have to go out into the workforce and use those things that you were supposed to have learned, you won't be able to employ them and you won't really be able to do them well. The big thing here is that a lot of trading is psychological, a lot of it is emotional, a lot of it is dealing with drawdowns. Now, what happens usually is when things are going well, there's 2 ways to mess it up following somebody else's signals, and let me show you what those are. Now, the first one is when things go well, okay? So when things go well, new traders tend to mess up copying trades. You might be saying, well, that makes no sense. Why would somebody mess up by doing copying signals that are profiting for them and making them money? Why would somebody do that? But here's the reality, is what happens is when you copy someone's trades and you don't know why you're copying them, when something starts working for you, what naturally happens is new traders start to copy those trades with way too much risk. Meaning, okay, things are going well, so now I'm going to put on a giant position size. And what tends to happen when we put on giant position sizes? Well, unfortunately, it usually results in losses, or at least when it does hit as a loss, it can be catastrophic. So a lot of times what happens is because traders don't have those years of experience behind them when trying to copy someone's signals, they become overconfident. And any trader who has actual success will know that confidence or overconfidence in the market is a very, very dangerous trait. You don't want to be overconfident because the market will humble you. So you have to be ready for that. So if your trades that you're copying are going super well, what happens is a lot of times people get overconfident in somebody's ability to call the markets, and then they end up losing a lot of money and they say, oh, this doesn't work, right? There's no pain, no gain for trading and investing. If you don't put in the time and effort to learn what you're doing, then you won't be able to consistently do anything well. So when we're looking at things going well, that is why people tend to mess up trying to copy other people. Now, let's talk about when things go bad, okay? Because it's unavoidable that whoever you try and copy or whoever you try and follow, or even your own trading, you are going to have times where things are not going well. We've said this a million times in the channel, and I hope that it's getting through to some people out there. Trading is not a straight line up, right? Anything entrepreneurial is not just going to be a straight line of success. It is going to be up and down and fun and not fun. And if you're good overall, it should go up over time. Now, when things go bad, it's pretty obvious what people tend to do. They say, oh, this doesn't work. This person is not a good trader. I'm going to quit. I'm going to give up. And I'm just going to go find somebody else who promises me 100% profitability. By the way, if you see somebody who promises you like 90, 95% accuracy with their trades, most of the time, that is not the full picture, because if somebody was able to call the markets that well, I would just say it's incredibly, incredibly rare for somebody to be able to do that long term, especially if they're using some sort of proper risk reward. If somebody does like 90% profitability, their risk is probably huge relative to their reward, just generally speaking from all the traders that I've seen in my experience. So again, when things go bad, what do people tend to do? Well, they tend to very quickly say, oh, this doesn't work, and cast the blame. The problem with trading signals is that a lot of times new traders use this as a reason to blame someone else rather than to take ownership and responsibility. No trader that I ever have known who is actually profitable blames other people or blames the market. I'll say that again. People who I know who are successful, not just some of them, but every single trader that I know, trader/investor who makes money overall, they don't blame people, don't blame others, and they don't blame the markets. This is a strategy that will never result in profitability. If you are this person blaming the market for hating you, blaming other people for, saying something about a stock or currency, and you followed their suggestion, that is a losing strategy. I don't care how long you try and do it, it will never ever work in the long term, because blaming other people will never address the real issue in the room, which is successful traders don't do this. They take ownership of what they are doing, okay? And this is not just relevant to trading, this is relevant to entrepreneurship in general. Trading is entrepreneurship in a sense. And I don't know about you, but I've never heard of somebody copying their way to starting their own business, right? There is creative thinking that's involved. There is hard work that you have to put in, dedication, passion for anything that you want to do to become, a self-made entrepreneur, which in trading, that's what you're trying to do. You're trying to come up with concepts and strategies and master your own emotions to build your trading business into a success. Trying to copy your way without doing any sort of the work that goes into it is just never ever going to work in my view. Now, let me add on to something. Let me add an important differential here. I think that there is massive value in following along with someone's trades and learning from them, okay? Not copying them, not just saying, oh, they bought Euro USD, I'm gonna go all in on Euro dollar. That is, as we said, a losing strategy because you don't know what they're doing or why. But if you can have the access to see somebody's trades and understand why they are taking them and start to build up reasoning and say, okay, well, they're doing this, they like this reasoning for entering into the trade. I agree with that trade. I'm gonna take that trade myself. I'm gonna put my own risk on the trade that makes sense to my tolerance and learn from people who have experience. And again, have that track record, very, very important there. If they have that track record, they have that experience, there is absolutely power, in my opinion, in sitting in and seeing what other traders who have more experience have. not copying them, not trying to just, mooch off of their abilities, because that's just not going to translate. You have to know your risk management stuff. You have to know your psychology for when things don't go right? It's very, very important to say, hey, this trader is experiencing a drawdown, and that's okay, because every trader experiences drawdown, as opposed to the new trader thinking, which is, oh, this trader's trades are not going well. They don't know what they're doing. They're not masters of the market that, win 89% of the time. Unfortunately, that's just not real trading. Real trading success is slow and steady, and this is what you would probably expect out of somebody who knows their stuff. Is a equity line, basically the profit or the amount of money that you have in your account, right? A balance or equity line looking something like this, where it goes up, it goes down, but overall you could draw basically a line of best fit that seems to be profiting overall. Not a straight line up. This is unrealistic. That is what people sell on the internet to make it look like it's an easy get-rich-quick scheme, but it is not, and trading success is more like this. I would say something like a 30-degree angle up is probably a reasonable angle to look for in terms of profitability. We can get, go back to geometry on that stuff, but really you don't want to see stuff that looks overhyped, overpromised, and just, that stuff where it's like, hey, just copy our trades and you'll become rich. It's not real. You won't be able to stick to their strategy, even if they are profitable traders. The thing is, a lot of times people mess it up. They'll follow somebody who actually is profitable, but they won't stick to a proper risk management model that's comfortable to them. They won't understand why the trades are being taken, and they will basically give up when things go bad. They will over leverage when things go well and end up just losing money because they're just gambling, right? They have no knowledge of what they're doing. So I hope this was helpful to you guys. Again, trading signals are it's a tough thing to say whether or not they're helpful or not, but I would say the differential is following along with someone's trades and seeing why they are taking them, understanding the reasoning behind every trade, understanding their risk management approach, understanding the psychology that goes into overall profitability. Those are the sorts of things that are seriously beneficial. Now I have to give you guys my sales pitch at the end. If you're interested in joining our community, we have a community where there's an open chat room, and myself and the other analysts on my staff are sharing their trades with full details, not to be copied, but to be observed and to be learned from as kind of an informational service that we offer. Down below in the description, you can sign up for the A1 Trading community. Come join us if you're serious about your trading. None of that overhyped BS that's out there on the internet. We are just a community of traders. We have a full staff and in-office, team going all in to try and work very hard to create that community for you guys. So if you're interested in that, check it out down below. Thanks so much for watching. I hope you have a great rest of your day, and we'll see you back in the next video.